South Africa will have to navigate an environment of increased risk in 2024. Allianz has identified three key areas of concern, those being insufficient power supply, strain on debt sustainability, and the erosion of state legitimacy ahead of the elections. And how those challenges are managed could impact growth. For now, though, the global financial services giant estimates that South Africa's economy will expand 1.4% this year. Mining production, meanwhile, has continued its upward trend. Output for December rose by 0.6%, supported by production increases for platinum group metals, coal and chromium ore. This marks the third consecutive month of growth, but it's come in below expectations. The market had anticipated an expansion of 4.9%. CAP is considering a sale of the logistics operations of its Unitrans unit. That's according to Bloomberg. The report says the firm would seek as much as 6 billion rand for the business, and this would go towards reducing debt. CAP has had talks with private equity firms about the move, but the preferred structure of the deal hasn't been agreed, and a buyer has not been identified. Gold Fields has warned of a decline in annual profit. The bullion producer says its headline earnings per share could register a drop of 18 to 24%. It cited the once-off net proceeds for the Yamana break fee. Gold Fields has also provided detail on its production numbers for the period. It says attributable gold equivalent production is expected to be about 4% lower and should marginally miss its guidance range. PetroSA has announced the appointment of a new acting CEO. Sasakho Magadla will take up the position. She replaces Sandisiwe Ncemane, who will return to the Central Energy Fund. Magadla has been with PetroSA for 16 years and most recently held the role of acting COO. According to the state-owned oil and gas company, the acting appointment is an interim measure until an official appointment is made by the firm's shareholder. And Bitcoin has risen 16% so far this year, reaching heights not seen since December 2021. That's thanks to expectations of interest rate cuts later this year. And January is not for U.S. exchange-traded funds designed to track the cryptocurrency's price. Last month, the U.S. Securities regulator approved the first spot Bitcoin ETF. The product is a watershed moment for the crypto industry, which has been trying to cement such a vehicle for over a decade. The market is also eyeing 7 pending applications in front of the US SEC for ETFs tied to Ether. In international news, Europe's largest travel operator, TUI, reported better than expected numbers in the first quarter as it swung to a profit on the back of robust travel demand. Let's take a look at this package report for more.
High demand for holidays is giving Europe's travel firms a lift. TUI said Tuesday that it swung back to profit in the first quarter and smashed analyst estimates. It reported a profit of almost $6.5 million. When another big loss had been forecast. The gain came over what is usually the weakest period for travel firms, with bookings generally at their lowest in the first 3 months of the year. Chief Executive Sebastian Abel said demand for holidays remained very strong, despite an uncertain economic backdrop. European airlines expect this year to see travel demand in the region surpass pre-health crisis levels. That's despite headwinds including high jet fuel prices. TUI is now expected to shake up its stock market listing. Shares in Europe's biggest holiday firm are currently traded in London and Frankfurt, a legacy of its 2007 combination with Britain's First Choice Holidays. However, TUI plans to drop the UK listing, saying a single German listing would better reflect its ownership.
And the troubles in the U.S. commercial property market, which have already hit banks in New York and Japan, moved to Europe this week, with German banks sounding alarms. Here's our reporter Darling Lachela with more detail.
That's right, Zinati. Big banks like Deutsche Bank have warned that issues within the property sector could spill over to Germany's banking industry. And joining me now with greater detail on this is DW correspondent Chiponda Chimbelu. Thanks for your time today. Now, as we get started, Chiponda, just take us through the latest developments on that front.
Thanks for having me. Well, there doesn't appear to be an end to the German property market crisis. During the last quarter of 2023, real estate prices fell by an average of 7.2% on the year. Now, that is according to the German Banking Association, VDP. On Monday, it said it doesn't expect a turnaround anytime soon for the property sector. The high interest rate environment is one major reason. It has made borrowing more expensive and affected financing. The commercial property market is also declining due to the high numbers of people that we see working from home. And because of the price decline we're seeing in the real estate market, Germany's housing crisis is expected to intensify. That's because developers are struggling financially, and because housing cannot be built fast enough, rents are also rising fast, especially in big cities like Berlin, Munich, and Hamburg. So ordinary Germans are also feeling the effects of the property market crisis.
Now, how is the banking industry affected?
Well, the crisis that we are seeing in the property sector is already affecting Germany's banking industry. Last week, a bank here, the Deutsche Pfandbriefbank, released an unscheduled statement saying it had further increased its risk provisioning in the fourth quarter of last year due to persistent weakness of the real estate market. And that was obviously an attempt by the bank to reassure investors about its liquidity situation. Deutsche Pfandbriefbank is also exposed to the U.S. market. In fact, last November, it had to cut its profit forecast because of the American commercial property crisis. The trouble we are seeing here in Germany with the industry is also linked to the U.S., a market to which some banks are especially exposed. For instance, Germany's biggest bank, Deutsche Bank. It has issued loans worth around $17 billion in the commercial real estate market in the U.S.
Lastly, just walk us through the outlook for the industry.
Well, right now, Germany is the country that has been hardest hit by the real estate market rout that is being seen in other markets like the US and Japan. The economic challenges in Germany, the high interest rate environment, the energy crisis, and worker shortages have made that worse. Now, that's why the industry here is calling for more government support. But whether that is something we can expect remains to be seen. The structural challenges that the German economy faces mean the government has its work cut out. Also, the fact that the government's ability to borrow is restricted by the constitutional debt brake means that its hands are tied. So it doesn't look like a solution will be coming anytime soon.
We'll be keeping a close eye on those developments. Thanks for those insights. Always appreciated. That was Chiponda Chimbelu from Deutsche Welle.